You've likely heard of the 3.5% down FHA loan, but did you know there exists a 3% down conventional loan? In this video, I will be breaking down what you need to know about the simple requirements for this 3% down conventional loan and why this loan may be the best option for you when buying a house. The 3% conventional loan is often referred to as a conventional 97 because with a 3% down payment, you are at a 97% loan to value. Smooth, right? Just like with any other loan type, there are some requirements that you must meet to get this loan. Number one, your credit score must be a minimum of a 620, which I think is quite a bit higher than other low down payment options. Number two, you must be able to show reliable income and employment. Now, this is pretty on par with other loan types out there. 3, your debt to income ratio must be below 43%. Now, if you just asked yourself, what the hell is debt to income ratio? Click the link here to learn all about it. Unlike some of the higher down payment conventional loans, conventional 97 does require that you live in this house as your primary residence. You can't use this loan type to buy a rental house. Nope, they don't want it. Your mortgage also can't exceed the conforming loan limits. And don't get confused by that. We're going to talk about it in a minute. The closest loan type to the conventional 97 is the very popular FHA loan. Knowing the fundamental differences between these two loan types, in my opinion, is crucial if you are looking to use a low down payment loan. Starting with the most obvious, the conventional 97 requires only 3% down. The FHA loan requires 3.5%. Property type is also a differentiator. The conventional 97 with no income limits will only allow you to buy a single family home. No duplexes, no triplexes, no plexes whatsoever. Only a single family home. Whereas the FHA loan will allow you to buy any home from a single family all the way up to a fourplex as long as you are living in one of those fourplex units as your primary residence. Now, for my disclaimer, there are other 3% down conventional loan variants that will allow you to buy multifamily properties. And with that said, they do come with income limits and other qualifying criteria. I want you to know that they exist, but are not what we are discussing in this video. With a 3% down conventional loan, you can get a loan for just over $548,000, while an FHA loan caps you at just over $356,000. So this is almost a $200,000 difference. When I was buying my first house, I got pre-approved for the conventional 97 as well as an FHA loan. And ultimately, the reason that I chose the FHA loan over the conventional 97 came down to what my credit score was at that time and the cost of mortgage insurance given my credit score. The conventional 97 requires a 620 credit score. This is much higher than the 580 score required for FHA loans. And with a conventional loan, you pay private mortgage insurance every month until you reach 80% loan to value or 20% equity built up in your house. Once you reach the 80% loan to value, that mortgage insurance can drop off. It is particularly important to note that the amount that you pay in mortgage insurance, your mortgage insurance rate, is inversely proportional to your credit score. The lower your credit score, the higher mortgage insurance you pay, and vice versa. Since at that time, my credit score was just barely past what was required for the conventional 97, when the quote came back for mortgage insurance, it was through the roof compared to what they were quoting for my FHA loan, where the price of mortgage insurance is not dependent on your credit score, but is fixed. So why is this important right now? If you have good credit but modest savings, if you want to cancel your mortgage insurance as soon as possible, or if you're looking to buy a property more expensive than the FHA conforming loan limits will allow, the conventional 97 could be an amazing opportunity for you. In today's ultra-competitive real estate market, sellers are way more likely to accept a conventional loan because of the higher credit score that's required and the fact that it can be closed so much quicker. Now, if you were drawn to the FHA loan in this market because of its low down payment, and you know that your credit score is above a 620, I want to encourage you to talk to your lender about the conventional 97. It may be a better deal for financing your home purchase. Not too long ago, I got to experience a remarkably interesting situation where the conventional 97 loan saved a contract for one of my clients. We made an offer on a home and ended up in a multiple offer situation with 12 other offers. Now, due to the strength of their offer, my clients had their offer accepted, and they were anticipating using a 10% down conventional loan. Well, it turns out that the house did not appraise for the contract price, and unfortunately, the seller was not willing to drop the price to the appraised value. This left my clients needing to cover the difference between the appraised value and the contract price if they wanted to continue on with this purchase. After explaining all of their options and the potential risks, my clients did decide to continue on with their purchase. Since they had already allocated their cash on hand to a 10% down payment and covering their own closing costs, I brought up the possibility of a conventional 97 loan. This allowed us to use their cash that they had on hand, move a little bit less towards that down payment, still cover their own closing costs, and then use the extra cash that they had not going towards the down payment to cover the difference in the appraisal and the contract price. The cherry on top is that we were still able to do all of this while keeping a monthly payment that they were happy with. Let me know down in the comments, what do you think of this conventional 97 loan? Is it worth it to you? Hey guys, thank you so much for watching this video. If you learned something new today, share this video on social media. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home. And don't get left in the dark. Here are 3 things that your real estate agent may not be telling you. I will see you in the next video.